Right.
Everybody's not built for real estate. So, I'm not going to say, go get this house, Airbnb, invest in syndication, if that's not your passion. I mean, just because you hear something and someone says it works for them, it may not work for you. So we're going to go over your goals.
All right. Hey, welcome to another episode. I could talk at one point of the Practical Wealth Show. Today's time, we're going to talk about one of my favorite topics is taxes, right? So we're going to talk about how would you like to stop overpaying the IRS? Okay. You have to pay what you have to pay, but you ain't got to leave a tip. All right. And so we're going to talk about proactive tax strategies for entrepreneurs with Catrina Craft. And Catrina, I'm gonna let you tell them about yourself, okay? And then let's give these people some ideas. So, Catrina, tell them, because you had an interesting story. You went from debt to not out of debt using the tax code. So, tell them a little bit about that and how you got into this game.
Thank you, Curtis. I'm happy that you love taxes. We're unicorns. I think most people hate taxes. So I'm happy that you are wanting to talk about this topic today. But what I found is when I started my business, I wanted financial freedom. I think most people start their business, they feel like it's going to be kumbaya and they're going to work less and they're going to have financial freedom. And when I started, I found out I was working more. It was more work. I was tired. I had one big client that made up 80% of my business, and she decided to stop. At that point, I did not know what to do. So that's how the $150,000 in debt began, because I was now in a position where I had still expenses that I had to pay, and 80% of my income was gone overnight. Then I began looking at tax strategies of the wealthiest. I actually was working with a tax strategist for Robert Kiyosaki. And so I was able to see what the top 1% of the wealthiest were doing. And I became
the current one or the first one?
Pardon me?
The current one or the first one? He had two.
The first one.
The woman.
But actually, I was a part of Wealth Ability as well. So I know Tom real right.
I know Tom.
Yes. So I was a part of that organization as well. And we focus on high income.
So now I feel good. You know what you're talking about. Because I already knew that. I'm just messing with you, but
But yeah, the first one. Yeah. And so I basically learned.
Because I heard books too. Diane Kennedy.
Diane Kennedy. Yes. In fact, I co-authored one of the books. I did some of the accounting in one of the books that we talked about real estate. So I really began learning about tax strategies.
Y'all better get a notepad out, because she about to drop some science on y'all. Come on.
I just started learning about strategies because as an accountant and a CPA, we learn about compliance. We learn about making sure the debits equal the credits, and it balances, but we are not taught tax strategy. So I went to get my master's in tax strategy. And I also said, I want to learn everything you know. I went up to Diane at the end of a conference that was a Robert Kiyosaki conference. And I said, I want to learn everything you know. So my first step in learning was to go after what you want to know. So I tell anybody, if you want to know something, educate yourself. Don't look at TikTok for education. Don't look at ChatGPT.
Come on, say that again. Say it for the people in the back. I already heard that. Right?
Yes. Please don't do that. So if you want to study and learn, then go to the best and study and learn. So if it's not in person,
and most of the time, you got to write a check.
Absolutely. Yeah. Well, mine was writing time. So I got paid because I did study under her and I worked with her. So I got paid, but it was my time for learning.
Yeah, there you go.
It was so good because then I started to think, okay, kind of imposter syndrome kind of got into me, because I'm like, I'm an accountant and I don't know this. Well, it's not my fault, and it's not your fault that you don't know it, because that's a different skill. Tax strategy and learning the tax code and utilizing the tax code is a whole different skill. that you have to learn.
Right.
Once I learned that, I was able to invest in real estate because
Mm-hmm.
that's a piece of the 4 types of assets. Real
Right.
estate is one. I began to invest in real estate and was able to get passive income as well as grow my business to pay off that debt.
Okay.
That's what I tell anyone. Don't get into a depression or feel like it's hopeless, because there are ways that you can improve that. And tax strategy and using the tax code is one. So I found that as a business owner, using the tax code is an awesome way to let the IRS pay for some of your lifestyle and your expenses and to use it to grow your business.
So that was your turning point. You started to losing 80% of your income forced you to kind of rethink your thinking.
Exactly.
Okay.
Yes. That was the turning point. And I had just purchased a home. So I was afraid of losing the home. I had started my business, it was less than 4 years old. And then bam, what could
Let
I
me
do?
let me have a teaching point here, right? Because the guy success leaves clues. So I don't learn this from my dad, but Dan Kennedy always says one is the worst word in business, right? So one big client, one, oh, I want to do government contracts, one big client. That terrifies me. Like I would never have all of my revenue. That's like a job. You can get fired for 1 or 2 reasons, any reason or no reason at all. And boom, your whole thing is blown up. So you have to diversify is that the lesson? You got to kind of
Yes,
spread the field out so all of your revenue isn't coming from one place.
exactly. That was the lesson. Don't put all of your eggs in one basket. Depend on one area of income. So not only I learned don't put it all in one client.
Right.
Now I say don't do more than 30% into one client, getting
Come on.
income from
Yes.
more than
I
one
love that.
client. And somebody asked me recently, well, what do you do if a client keeps wanting more and more and it makes them like a larger percentage? I said, well, what you could do is outsource the piece that you really don't like. And that way you're not depending on just them and you still have the capacity to bring on other clients. So you may want to outsource the bookkeeping if I'm an accountant, or I may want to outsource a piece of what I'm doing
Right.
just so that it doesn't get that large where then
Right.
I'm dependent on that person.
I love that. Let's
Yeah.
talk about defense versus offense. Okay. So you often say accountants play defense. What does playing offense with your taxes look like for a business owner? And here's an extra question to that, just for my non-business owner clients. Is there anything that what I call cash earners can do? People that are more W-2 also.
Yeah.
Let's throw them a bone.
Yeah, it's really hard. I feel like, and I know that the tax code is made for investors, business owners, and like you said, landowners,
Right.
and real estate investors. So that's landowners. And if you're a W-2, I really encourage you to do some type of job that's consulting that you can get a 1099. So you're starting a business
Right.
and you can maximize the tax code. But as a W-2 earner, it's limited. HSA.
Yeah.
You
Exactly. You need
you may want to invest.
like Kiyosaki would, or especially early on, he would talk about. He wrote a book
Cash
about
flow.
network marketing.
Hmm.
He would talk about I used to call it the people's franchise. So I like the industry, except for most people don't know how to make money in the way you think it's going to work. It don't really work that way,
Right.
but it
Yeah.
does open up the tax code for you.
Correct. Correct. And you need to be careful because you do need to make money. You can't just continue to have
Right.
losses because
Exactly.
the IRS will say it's a
Let me
hobby.
sign up for this thing so I can write off this and that, and then they, have truth. So okay, well, I want to buy a Escalade, and I got this side Amway business, but no shade on Amway. I'm just making up a name.
Right.
But I can write off my $100,000 truck. No, you can't. Right?
Right.
So
Right. Yeah. You need to make sure that it is a legitimate business,
yep,
that the goal is revenue production,
that's right.
and the expenses need to be ordinary and necessary. That's what the
Ordinary.
IRS looks at.
Yeah,
It has to be
yeah.
ordinary and necessary for your industry. So let me give you an example. There was a business owner that wrote off his pet. He wrote off his cat. And believe it or not, the IRS allowed it.
Hmm.
And you know why? Because he
Why?
was a junkyard owner. And the cat would scare away the rats
Huh.
for his
Okay.
business. So
Okay.
it was allowed. But if I tried to write off my pet, if I had a cat, it would not be allowed.
I
So
have
that's
3, so
why.
I don't think I want to like, oh, I can let me get a deduction out of that, right? So,
Right. And another instance for you pet lovers, there was a financial advisor who traveled around with documents in his briefcase. And so the guard dog was in his car, and they allowed that dog as a deduction because he was protecting these assets that he
that's
carried around.
interesting. Okay.
So it's just interesting, but you need to know the tax laws, what's ordinary and necessary, what's passed in your state, because
Mhm.
each tax court and each circuit could be different. And so it's really important to understand that code in that manner.
Okay. So let's go back to offense. What does offense look like for you when you
Mhm.
say you help people with using taxes as offense? Let's tell me
So
about that.
offense means we're being proactive. If
Mhm.
you come to me on if you come to me on April 1st with
Yes.
a bucket full of receipts and you're saying, save me taxes, it's really too late.
Too late.
Proactive tax strategies and being offensive, playing offense, you are going to work with me throughout the year so that we're maximizing those deductions throughout the year.
Mhm.
The best time to start tax planning is at the beginning of the year, so you have the full year to really take those deductions. But it's never too late. So even October, November is a great time because there are some deductions that you can take and it's not too late. You may already be taking deductions and don't even know they're deductions. You may be,
Right. Right.
taking trips and you don't know it could be a business trip. You may have a home office and you don't know you can deduct that. You may be paying a consulting fee to your family members and you don't know that that could be a deduction. So it's not too late to have someone to really analyze what you're spending on to see if any of those things are deductions.
So will TurboTax tell me that?
Nah, not really. And ChatGPT won't either. In fact,
Right.
I used ChatGPT for a strategy and they missed $40,000 in deductions. And I know you know that ChatGPT hallucinates. And so sometimes it will give you wrong answers. And
Mm,
ChatGPT is only as good as the prompts. And
right.
I asked ChatGPT something about a form. It gave me the wrong answer. Then I said, well, ChatGPT, I said, should you be using this form? It came back. You're correct, Catrina. The IRS has updated. So if you don't know what you don't know, then
Right.
using those software, standard softwares, if you have a business, now if you're W-2, maybe that's right for you. If you don't have, extensive type of tax return that's difficult, I'm not saying that's bad. But if you have a business, I will not recommend that you use out the box
Yeah. I
software.
said
You're
once
missing
you in
what you
business, you outgrown all that stuff,
right,
and you need
right.
and even then it's still history, right? There's nothing you can do about it. You sit down
Mhm.
like, March 15th to start, oh, I'm gonna start preparing to get my taxes so I get my refund. That thinking is wrong from the door anyway, because
Exactly.
that means you're getting your money you
Exactly.
already
You're letting the
back.
IRS use
Right.
your money to invest. You should keep that. You shouldn't try to get a refund.
Right. Exactly.
You know,
Why not? I wanted to hear you say it.
you should not try to get a refund because that means that you've given the IRS your money over the year and they've used it how they've wanted to. You should keep your money so you can invest it throughout the year.
I was
Don't
going
think I'm
to
gonna get
find
a refund and go buy
Yeah,
this
you're
TV.
getting your own. If you look at the form, it says, I was just telling somebody yesterday, I said, because he was getting like 8 grand. It was another woman I go over, Katrina, the first part of our process is cash flow control, right? And
Mhm.
so I'll do a cash flow map. And I was going on, I was like, this is short. You got that. She says, well, you get a refund last year. Oh yeah. How much? $13,000. I almost fell out. Really? Okay.
Wow.
I said, I need to see your taxes. They said, I got a business. I wrote it off. Yeah, but you could adjust. Now, I don't want to give tax advice. I need to double check that what you said, because I had ChatGPT figure out a W-4 process that I could give people. So now I gotta go back through it and make sure.
Go back, make sure the prompts
the
are right.
form was old. I know they changed it, and I realized, as you said that, oh, the form is old. I gotta go back and re-question this. But the thing is, you need to look at that stuff, right? Because you could get more in your pay. Like, if you know, that means you're on a rough thing overpaying by like $1,000 a month. That you could probably use that $400 or $500 of pay in your check every week.
Right. And you could have invested that and probably got at least 1%, 2% a month.
At least, right? Or saved it. If you don't have any savings, you need to save it. You can use some of the savings, some to attack the debt, but you don't. Yeah. So anyway, but because you're giving away money, to me, that's offense. My mind is going. I'm just got all these things I want to say. Talk about the I love people that have a process they name, right? And so the craft money map. Okay.
Yes.
Walk us through a high level of because I want them to call you. So of your system, and how does it help entrepreneurs, you say, cut their taxes by at least 25% or more and boost profits by 20? See, the boost profits by 20 is fascinating. Let's go there for a little bit for me.
So the craft money map, it's a blueprint that we use. And craft, of course, is my last name, but C is for cash management. So we're going to start with looking at your books. Like I found clients where they're paying for recurring subscriptions and didn't even know. You have to look at your books. So we're going to get rid of those expenses that you're paying. And you don't even know, you're not using them. They're not bringing you a return on your investment. So that's the cash management. The R is for retirement. We're going to look at retirement planning for you. So I don't do retirement planning by myself. I don't help you invest. I work with financial advisors to do that. But I'm going to help guide you through areas that you need to ask. And I will tell you, as far as the tax savings, how certain type of retirement vehicles can impact your bottom line. You know, you can have different type of retirements and it's a tax deduction. So why not have the IRS pay for your retirement? As a business owner, if you have a profit sharing and you're putting that into your business as an expense, it's profit sharing for your own retirement and it's a deduction. So why wouldn't you do that? So we talk about that. Asset is for asset. And we talked about there's 4 different type of asset classes. So we look at different asset. We look at asset protection. I work with asset protection attorneys. While you're building, you don't want to lose that. So you want to make sure your assets are protected, as well as we're going to talk about different asset classes, whether it be from real estate or investing. We're just going to give you an overview. What's your goal? Everybody's not built for real estate. So, you know, I'm not going to say, go get this house, Airbnb, invest in syndication, if that's not your passion. I mean, just because you hear something and someone says it works for them, it may not work for you. So we're going to go over your goals.
That is so true. Because I like it, but I don't love it. Right. But I'm my dad's son, so I love business.
Right.
You know, because my family grew up, we had a supermarket growing up. So
okay.
My
in Philadelphia or where?
Philadelphia, yeah. In Philadelphia. We were in a tavern business. So I grew up in retail, and I grew up hearing my dad say, from the time I was 7, boy, you'll never make any money work for somebody else. I've heard that like,
oh wow.
That's
great to hear it that young.
Yeah. I mean, I heard it, you know, when I was decided to go full-time in financial services, like, Dad, I think I want to do this full-time. I was like 22, 23. It says, go ahead. Never make any money work for somebody else. You know, now I wasn't any good. I'm introverted. You know, I think I just got my insurance license, and I was, you know, I think I hadn't had my securities license yet, which I'd let go around 2000. But so I just give that stuff to other people. I don't like that part of the business anymore. But you know, he just reminded me, look, just go ahead, do it, just make money. So you know, so he used to say, like, your store's got to be open, which means, did you work today? Like, you got to show up. And make your calls or see people, whatever it is for you all, like whatever. If you're not, I heard it from Daniel Priestley. One of the things I measure is laps, leads, appointments, presentations, sales for you business owners. And so all revenue flows downhill from lead generation. If you want to make money, you know, you got to have people to serve, you know, that's where the money comes from. finish. I think I cut you off. Finish the map.
Okay. So we did the C, the R, the A. The
Right.
F is financial freedom. I mean, that's
Okay.
what we all are looking for. So really, when you look at, you just talked about the sales process.
Right.
Some people are chasing sales, but why? What's your goal? What's your financial freedom? Is it a number? And a number is just a number. Some people are like, I want to hit 1 million. Because what? I mean, what do you want to do
Exactly.
with it?
Yes.
Is your goal,
Yep.
to pass it to children? Is it to give to communities? Is it to, what is that goal? Because I tell people all the time, especially sometimes women in business, we feel like we can't say we want more money.
Yeah.
I tell people, women especially, money could be your power. It's your power to make the decisions you want and the power to invest in your community and your family the way you want to. Don't depend on the IRS or the federal government or the state to do it. So you have the power. So that's the financial freedom. And T is tax strategy, of course. So using the tax strategies to reduce what you pay or use the tax strategy to get money back. So if you have credits, so different types of credits you can get from the IRS as well. So that's the craft money map.
I love that. I'm now thinking, can I turn an acronym out of May? Right now.
Yeah, you can. Money, asset management, and yay, we made it.
Right. We made it right. I think I might do that. Right. So we call the process the money for life, money, MONEY for the number for life blueprint.
Okay.
So it's kind of an homage to a mentor of mine who passed away recently. He had a great book called Money for Life, How to Thrive in Good Times and Bad. I was in the process of rewriting it with him and he passed away. So it's like,
so are you going to finish it? Or are you going to finish the book?
Well, I'm going to, yes, but I'm not going to finish his book because I don't have the rights to it. But I'm just going to give him a lot of credit for a lot of inspiration from the ideas. Okay. And because my thought process comes from probably a Kiyosaki, a bunch of stuff. And I'm just, I intake that stuff and then I curticize it, so I kind of make it mine because I work. Actually, I'm not just an author. I work with clients every day. So what are the problems I see that families, that business owner has in here, how these strategies can do that? So I'm kind of, thinking through case studies and things that come through, kind of my unique lens coming from a self-employed person growing up in, inner city Philadelphia, and figuring this crap out,
Right.
And so anyway, this is about you, not about me. So we're going to keep going. And let's talk about entity structuring, right? So most people, I'm going to let you talk about it. Yeah, many entrepreneurs or investors, what's the number one mistake that you see people making with their entity setup? Let's go there. I'll start with that.
Okay, that's a good one. The number one mistake I see is individuals that form an LLC. And the reason I say it's a mistake because they don't know what they're doing.
That's right.
And LLC is a great formation entity, but most people don't realize that LLC is not recognized at the federal level. It's a state type of entity. It's the newest type of entity formed in the 70s. And the LLC can be taxed as a partnership, a S Corp or C Corp or sole prop. And a lot of times when people come to me, they say, I have an LLC. I'm like, okay, well, how are you taxed?
How you taxed? Right.
They have no idea.
Yeah.
So that mistake is there because they go to the attorney and sometimes the attorney is not privy in what type of business they're doing, or they might not have tax law knowledge. And so they don't know that LLC, you have to say how it's taxed to make sure that it's in the proper way, depending on the business goals. Like if they may be trying to sell the business. So how do you need a form? You may have different types of expenses you want. You can't do it in a partnership, or you make it do it in the C Corp. So you need to understand the business holistically before you really form the LLC and understand that it's not a federal type of entity structure. You need to then tell the IRS how you want to be taxed.
Because it's not a tax. They think it's a tax thing. It's really more of an asset protection thing. So you're not doing business under your social.
Exactly.
That's all you're doing. You still file a Schedule C profit and loss, and you're still subject to self-employment tax, right? So
Correct.
correct. This is why I say, look, talk to your person, but if you start averaging about $4, 5, $6,000 a month, it's time to call your people to, maybe get an S election or whatever it is that y'all decide. For most people, it's like an
Right.
S election, right? Because it's still passed through, and if you
Right.
want to
It's
run
still
payroll, all that
passed
kind of stuff.
through. Yeah.
Yeah.
So
But then they need, because it's really two sides of the coin, right? So it's the tax strategist, you, and the attorney, right? And they
correct.
need to be talking.
Yes. All your financial advisors need to be talking, because this is a holistic practice. And I
Yeah.
know you believe in that, Curtis.
Yeah.
You can't do it in silo, because
Right.
if I'm suggesting one thing and Curtis, you're suggesting something else, and they clash, it just makes the client confused.
Yes.
And
Yes.
so you need to work together with your financial advisors. I like having a meeting once a year. I think it's great. Like, I work with asset protection attorneys. I work with different financial advisors. And so we're discussing our clients. We're not just like, okay, you're over here and I'm over here. So you have to make sure you're with the right financial advisors that agree with that philosophy.
Right.
Everybody
With the
does.
philosophy. Yeah,
Everybody does.
exactly. That's what I try to do. Is we're working that now. Is like, we call it the macro manager. Curtis is the macro manager, and then I want to meet your people. Let's talk about it. Let's stress test our ideas, because I don't guess. Right. I use models, and I can, I don't use assumptions that the market's already going up. So I work differently, because I don't like, I always tell people, like, last time I checked, ain't nobody got a working crystal ball. Right.
Exactly.
So you need to be
Yeah.
able to look at
And
stuff.
more knowledge is better. I mean,
Yeah.
why not have 4 brains that have, different
Yeah.
aspects of different
So
areas?
everybody has their own geniuses, their own zone of genius, and nobody can be good at everything.
Exactly.
And because the business owner, even you could be making $1 million or $500,000, whatever, you're doing well, but you're good at your thing.
Yes. And you should stay good at that thing,
That's right.
because that's what you have a passion to do. Hopefully, if that's why you started the business.
And that's what's keeping the lights on. Like, I view the business, like, this is where I differ from a lot of financial people, because I view your number one asset or your number one investment is back into your business.
Yes.
Right. And so too much advice wants to lock money in other plans that is hard to get it back out to invest back into your number one asset. You put $1 in your business, make $2, that's 100% return.
Yeah.
So, I like doing that. Or
there was
having
a
the
business,
liquidity to do that.
Yeah, because there was a business owner that I talked to, and she had a 45% profit margin, making $2 million a year.
Mm-hmm.
And she was getting recommendations to invest in, like, I think it was a mutual fund that was making 5-6%.
Right.
And I'm like, why? Like, you invest back in yourself and your business, you're getting 45%. Who
Right.
can beat
You
that?
want to give him some fund manager you never met. Because our 3 rules, Catrina, are: invest in what you know, or invest in knowing, invest in what you could control, i.e. your business, your marketing, your labor, and don't chase returns. See, so she's defaulting to chasing returns because that's what everybody else is doing,
Right.
but everybody else is broke.
And that's why
everybody else is an employee, right? And you can't do what employees do.
Yeah, you can't. Every situation is different. That's why we
Right.
don't have a cookie cutter approach.
That's
I mean,
right.
we
That's
have
right.
a customized strategy where we're looking at your goals and we're looking at what you've done in the past and your potential growth to come up with a strategy. It can't be cookie cutter. It cannot be, because everyone is different.
Catrina, I like that. We're very aligned. We think alike. Great minds think alike. What is the Robert
Absolutely.
Kiyosaki show? Your definition of genius is, do you agree with me? Right. So,
well, we're both geniuses.
Right, exactly. So let me ask you a question. So what are people overlooking? What are a couple of deductions high earning entrepreneurs almost always miss, in your opinion?
Ooh. Recently, I've just seen a great way to really tell my clients that they need to have board meetings. because
Mm.
a board meeting is a
Mhm.
deduction.
Mhm.
It's required in a C Corp and an S Corp. It's allowed in an LLC, filing in some of those, or a partnership. You can choose where you want to have a board meeting. I just had a client, they flew first class. They went to a resort that was $1,000 a night.
Mhm.
They had a board meeting. And you know who's on their board? Their
Mm.
children. They're
Good children.
21 years old. It just happened to have the board meeting around Christmas time.
Yep.
You have to spend 4 hours doing business, but 4 hours could be travel time. So on a Thursday, you travel, you spend 4 hours. The rest of the day is free. On
Right.
Friday, you have a 4-hour board meeting. The rest of the time is free. Saturday, Sunday, that's non-business days, but you're still there. The IRS is not going to make you come home and go back. And then on Monday, you have maybe a 2-hour meeting, and then you fly out. That's your 4 hours. The
I love
air is
that.
deducted. The whole hotel is deducted. The meals on the days where you're having business is deducted. Your travel, as far as, if you have Ubers. And so then you're paying for your meeting, which is
Mhm.
required,
Mhm.
and it's a deduction. So they just they spent $15,000, and we got them a deduction for that. They're a 30% tax bracket, so marginal bracket maybe 24. So great savings.
And so that break that into numbers. So that means they're making, is it 15,000 off the top of their gross adjusted income, or is it work out to 24% of the 15,000?
Which 15 are you talking about?
The 15,000 they spent.
So the 15 that they spent is going to reduce first their income. So if they
Yep.
made $1 million, then that 15 will get deducted from
Off of that.
their
Okay.
off of that. But how you calculate your savings, you say, well, I'm in this tax bracket and the marginal rate. So I'm saving like 15,000 is something I'm not taxed on.
Right.
So then you figure out, if I'm in this marginal bracket 24, I'm saving this 24% on the 15,000.
There we go. Okay. Most people, I don't, I don't. That's a good breakdown, because I think
Yeah.
that's powerful to understand that.
Yeah. And I
That is
think people
cool.
need to know it's not dollar for dollar. Some people think, oh, I'll spend, buy a car and I'm going to deduct 100%.
Go
You
there
do
for a
take a
second, because
deduction for that. I
what they
just had a
do is they see
yeah.
the big beautiful bill, which is the big beautiful law, and they hear all this stuff, which is favorable if
Yes.
you're the business owner or investor. Hint, hint. So become a business owner or investor. Don't hate the
Right.
player, hate the game. You got to just know the rules.
Exactly. Like I say, the tax code isn't fair, but that's your opportunity to use it for your benefit. If you know how to use it and you're an investor, landowner, a business owner, then
Or you can
it's
just
up to you to use the code. You're
just
losing
stay and
money.
go march on Washington. Kurt's going to figure out how to use the code to make some money.
Because you're losing money every day that you don't use it.
Yes.
So you think it costs money to get these advisors. You're losing money because you don't have the advisors.
Yes. Yes.
So why keep losing money? That's insanity. Like, you think you keep doing the same thing and think you're going to get a different result. That's called insanity.
Let's talk about, that's so good. Risk versus reward, right? Some entrepreneurs are, and some accountants. All right, let's go back to the are too afraid of being too aggressive with the tax strategy. How do you draw the line between smart planning and risky moves?
Okay. I want to tell you, I look good in orange. So I have orange
Right, you
today,
got an
but
orange right now, right?
not an orange jumpsuit.
That's right.
So
Orange is not the new black, right?
so I feel like, first I ask a client how risk adverse they are, because there are some tax codes that may be more risky. So if you're risk adverse, I'm not going to suggest that. But in our tax code, we give like a 40, after we do the plan, it's like a 40-page plan, and it has the tax code guidelines and numbers.
Yeah.
So I want you to know that everything that we're doing, it's going to be legal and ethical. All right.
Mm-hmm.
Now, what is also important is what's ordinary and necessary, because we talked about a cat in somebody's business is a deduction, but in my business it wouldn't be. So you have to understand, based on your industry, what's ordinary and necessary. And that's why it's important to work with someone that knows your industry. So I don't work with restaurants. That's not my specialty. So that's another thing I would advise: find a expert, a professional that knows your industry, because they will know, like, your return on your investment, what's average numbers. They will help you with those KPIs, and they'll also help you with what tax code is allowed based on your type of industries, because the IRS audits based on that. So if there's a number that comes through and they have an audit guide based on those codes, the SIC codes that you put in your tax return, they audit. If they see something out of line within that code, then that's when audits could be kicked out. So you need to understand what your industry can do.
Okay, that's good stuff. Let me ask you final questions. I want to tell people how to find you. You work with you've managed finances for celebrities, for creators. Is there one principle that everyday business owners could use and adopt right now that these ultra wealthy people are using that you can think of?
Absolutely. One thing I'd like people to know, that people value or look up to celebrities a lot of times, but they have the same financial problems that you have. Theirs could be even stronger because they have to spend more money for their lifestyle. They have the managers, they have the stylists, they have the lawyers. So they have more expenses, and they get jobs infrequently. They get a job, and so they have to live off of it. And so what I've found is business owners should live as if they don't know where their next check is coming from, because a lot of times we don't.
Right.
So you're going to just have a great budget where you're putting aside money for savings, for, you have a emergency, so you need that emergency fund. So in high times, make sure that you're stacking, you're putting away, so that if a downturn comes with the economy, like, I know a lot of people that had contracts with the government, and it's just changed a lot. They're not getting those contracts. They're not getting those grants. And if they didn't have a plan for that, which a lot of people didn't, you could really suffer. So I would say, make sure you have a plan, and you're saving, so that when the downtime comes, you'll be ready. And then do tax strategy. Don't wait until tax time. Meet with your person at least quarterly. You need to meet at least quarterly.
And if they don't do that, then it's time to maybe consider other things. If they're just, because people think they're getting tax strategy, but they're really not. Because if they're a successful tax preparer and they're doing 300, 400, 500 returns between January and April, they ain't got time to do no planning.
Exactly. And it's hard because.
So not that they can't, that's not how their business is structured.
Yeah. And it's really hard, because when you look at having a tax preparer and a tax strategist, it could be two different things. And sometimes clients don't realize that. That's two different fees.
Yes.
You have a tax preparer, that's one thing, but a tax strategist, you pay a different fee for that.
Yeah.
So it's all,
and it's really more of a investment.
Yes, it's an investment.
It's an investment.
It's a
You have to look
return
at the investment, because that should get you back more than what you're paying. Yeah.
Like for me on the Craft Money Map, when we start, we have a 5-month system. I know before we start the range that I can save you. If I can't save you more than my fee, I will let you know, and I won't work with you unless you want to work. But I'm going to tell you, this is what the potential savings would be for 1 year. But you got to remember, It's multiple years. So if I give you this strategy this year and you save 20, next year you'll save 20 or 25 using that same strategy. So if you understand that, and then you understand my fee, then you understand the return on your investment. I'm going to tell you that up front.
I love that. Catrina, if someone wants to start crafting more cash today, what's the first thing they should review in their finances to stop overpaying? And then I want you to tell them how they can reach out to you.
Okay. First, you need to look at your tax strategies. If you don't have a tax strategy, find a tax strategist that can help you.
Yeah,
Go
exactly.
back 3 years and look, because you can amend your return for the last 3 years. There may be hidden money. So first, let's try to find some of this money that maybe you've missed. There's opportunity to do that.
Yeah.
Also, we want to look at, are there any low-hanging fruits? So right now, I may be looking at a client. He has an automobile, 250,000 miles. He wants a new car. So with the one big beautiful bill, it makes sense for him to do it. I don't tell a client that doesn't need a new car to buy a car, but for him, $75,000 car, and he's going to save in taxes on that. He's going to save by buying that car $18,000. So it makes sense for him. So you really need to get with a strategist, make sure we understand your goals, and then maybe amend taxes to get money back immediately, or look at the low-hanging fruit that we can do in the last 2 months so that you can get a cash infusion in your business. So
let
if
me
you're
ask you this. You just hold on one thing on that. So this is
okay
for Curtis. So let's say I want to get a wife a car. It's over 6,000 pounds between so as we record this, it's September, right? So if I bought a car that qualified for this, and she's got the business miles and everything, in November, even December, can we take the whole deduction, even if we financed it in this tax year, 2025?
You can buy it on December 31st, 2025 and get this deduction. It has to be 50% used for business. So you definitely have to take it off of you just can't purchase it. You have to take it off of the lot by the last day of the year and utilize it. Of course, it should be 50% for business if you use it on that last day. You better do some business.
Right.
But yes, you can still take that depreciation, the section 179, and the bonus.
All right. She gave y'all 2 gems right there. I can go back and listen to it to hear the first one, but there's like 3 or 4 like action stuff that you can do. Catrina, this has been awesome. Tell them how to find you, follow you, learn from you. Tell them where to go.
Exactly. So I'm at Catrina M Craft, just like my name on the panel, and I'm on Instagram, Facebook, LinkedIn, YouTube. Am I missing something?
TikTok?
No, I'm not on TikTok.
Okay,
I am on TikTok, but I don't really do TikTok that much.
Yeah, you're like me.
All of those socials, and my website also is Catrina M Craft. I do have a newsletter. If you go to my website, you can sign up for my wealth and tax tips. I do videos on there. So, if you're driving in the car and you want to listen, you can do that. And then I also have a written email. So make sure to follow me. I love getting followed and answering questions.
That is awesome. That's why I had to squeeze in one for me before we go.
Yeah, and so I'm going to make sure your wife has that car.
Yes. So we're going to work on that. And because she deserves it, and I want to have a better car than me, so it's good. I think she walked in. Oh, she didn't hear that, right? So the surprise room. So listen, thank you. This has been fantastic, and so follow her, listen to her, reach out if you have questions. And guys, I thank you for listening to another episode of the Practical Wealth Show. I hope you better have this is go back and listen to this show again, okay? Because she gave you some bars, and there's plenty of stuff out there to find about. You have to be knowledgeable, because even when you sign the return, you're signing it. The IRS don't want to talk to her; they want to talk to you. But
absolutely,
you know what I mean. So you need to know what's going on. Don't say, "Well, by the worst," the worst words I hear hearing, "Oh, my CPA takes care of that."
Yeah.
You have to, it's your money. You have to know what's going on in your money. You can't be an absentee owner when it comes to your money. So,
Absolutely.
all right, I'm not going to start another conversation, but
we'll do another podcast.
we have to do another show. Guys, I thank you. I hope you enjoyed this. And guys, go out there and make it a great day. Catrina, thanks again.
Thank you, Curtis.